Hi guys, and welcome back to another investor chat. Not quite sure how many people are going to watch this, but if you like my analysis, feel free to like and subscribe. I'm not a financial advisor, so anything is my opinion, and it's the data from the organizations that we're looking into. But that said, I've got a pretty decent history of finding stocks that go up 2, 3, 5, 10 times whatever over the last kind of 10-15 years. And in this video in particular, we're going to be looking at two recommendations that I've been talking about now for a number of years now. Firstly, Cakebox, that I've been investing in since, I don't know, when it first floated on the stock market. Was it 2018 or 2019? Can't remember. Up 300%. And Escape Hunt. And we're going to go into a bit of a deep dive into Escape Hunt because they've just released an update fairly recently. So we're just going to go through that first. This is released about just less than 2 weeks ago, and I thought it was really interesting. So what's the first thing? This is like ahead of a release of unaudited interim results in September. So it's a bit of a sneak preview. So basically what's happened, there's a trading update announced. The UK's basically they're opening up their owner-operated stores. Trading in the 10 weeks from July has been encouraging. Results returning faster than expected, and results are ahead of management's expectations, which is interesting. And if we look at the 10 weeks, if they're comparing it to the same period in 2019, which is more relevant than COVID, because 2020 isn't a like for like, results are up 58%. It's just kind of interesting because I always thought maybe people wouldn't want to go to escape rooms because they've been trapped inside anyway, but that assumption has been wrong. And over this period, revenue from the company's 8 established owner-operated sites open in 2019 was at 95% of the levels. Occupancy has continued to grow week on week. So it's all looking pretty good. So sales are exceeding 2%. We're still not fully out of COVID, obviously. There's pockets of people that are being locked down from pings from the NHS app. Let's take a look at what else is happening. So at the site level, it looks like for the 10 weeks showed an 185% increase of EBITDA at a site level, which is going to be similar to the company level because they're owner-operated stores. I think that's really interesting there. On a like-for-like basis, site level EBITDA from the 8 established sites increased 83% compared to 2019, and this improved further to 114% over the last 5 weeks. It's even getting better. In their 8 established stores, 83% improvement. Almost double. And then if we look at the last 5 weeks, more than double from 2019, which is interesting. Shows that there's a lot of demand there for the stores, and that's interesting. What about overseas owner-operated sites? This is something they've recently got into. They were franchise operated and they've bought in, so I'll be interested to see what they say here. The current levels of trading, performance for Dubai would have paid back the investment in under 12 months. That means, so that kind of means that presumably they're doubling their investment every year, which is 100% return on capital. Return on capital, guys, is just another way of saying return on investment, return on the money that you put into the business, whether that's your own cash, equity, or whether you're getting it from debt. It's just a universal metric across the board. Finance invested into the business and what you're getting back. So if they're getting it in less than 12 months, it means it's more than 100% return on investment, which is pretty amazing. Famous investor Peter Lynch said that if anything produces a 50% or higher return on investment, you should sell everything and buy into that. Just an interesting quote there from One Up on Wall Street, his most famous book. And this company, it looks like in Dubai at least, is getting a return on capital of above 100% a year. What about Brussels and Paris? They also experience a faster than anticipated bounce back, turnover marginally ahead. So maybe that's not doing quite as well, Brussels and Paris, as Dubai. Interesting. I'm not quite sure what that's down to. They haven't got into it in here. So the franchise estate has performed in line with the board's expectations. Stronger performance in Australia, and the closure of a lot of sites, most notably in France. So maybe France and Belgium have had that impact from COVID still. So maybe that's why they haven't had such a good period. So let's have a look at the rest. H1 2021. So cash was managed carefully. Cash balance 2021 to June was 2.4 million. They've got a convertible loan of $1 million, so presumably that's 3.4. Unaudited revenue for 2021 was obviously impacted by COVID, blah, blah, blah. Revenue to 2021 expected to be 1.1 million. Interesting down, slightly down, which is interesting. They were saying that revenue was down in 2020 due to COVID, obviously. That's interesting that they're saying that EBITDA from some of the sites is higher. So maybe that means, from my understanding there, if you're getting a doubling in Dubai, but revenue is not quite high, so it kind of suggests that some other countries, probably France and Belgium, where they have, I think, a couple of stores, maybe are impacting revenue. So presumably, though, the overall story is pretty good. With 113% in the last 5 weeks in the UK increase, and presumably a more than 100% increase in Dubai. I would assume if you're getting EBITDA of 100% return in Dubai. So presumably, what this says to me is that once restrictions are lifted across the board, they'll see revenue increasing everywhere. Here we go. Many of the group's franchises were affected by lockdown in their own countries in both half periods. And here we go. This is the owner-operated site revenue from remote and digital propositions is up from 53,000 to 151,000. So I think that's an interesting play. Wonder how that goes up in time. It's not as much as I kind of thought it could be, but let's see what else they say. Excuse me. So they've got 18 stores in the UK now. That's good. And it's work on the 19th store in Essex. And they're installing sites there. Further sites will continue to be favourable, presumably because of the low price of commercial property, as I imagine. So they'll want to achieve 20 stores by the end in the next year. So they're obviously confident if they've got basically 19 more or less ready. They only need one more in the next year, or 10 months from the date of recording. So that's fine. So they said that the digital and remote has slowed since the physical rooms has increased. So it doesn't increase the size of the pie. It's basically split, I would suggest. That suggests. So they're expecting B2B sales, which is the corporate proposition, physical escape rooms to pick up in the autumn. So that's interesting. So maybe that digital and remote propositions isn't such a large piece of the pie for them. It'd be interesting to see what the EBITDA is on that 150k digital revenue. I would assume that it's a one-off or a low costs So I would assume that EBITDA on the digital revenue is higher than the physical, but let's see what happens in the September update. And they're saying that US progress is slow because of travel restrictions. So they think that's going to be short-lived. So that's basically it on the escape hunt side of things. So what's my take on that? Well, I think that it'd be interesting to see what the total figures are of of revenues and profits for the whole year when it comes out in September. I think it's like overall it's pretty strong. They're getting in revenues. It's slightly lower than before, 1.1 million as opposed to 1.3 million. But what they're saying in July and August is very encouraging, and suggests that it suggests to me that there'll be revenue increases next year and the following year. I think the digital proposition hasn't been as strong as I would have hoped. And also America being stalled doesn't really show what's possible there. So if we look at the escape hunt share price, maybe that's been reflected. It's at about 32 pence, which is market cap of about 30 mil. So maybe, like, I think what the market's saying about escape hunt is that they're still not sure about basically the whole of the physical proposition and the digital proposition, the US being the big question mark, whether France and Europe recovers, what happens to the digital revenue, this B2B revenue as well. So I still think it's a good company. I think that, let's just assume for a moment that revenue across the board goes up as the UK has once everything is open. We could see potentially a doubling of revenue everywhere. So year on year, let's say that is about 2 to 3 million, and that's without, let's say 2 million, and then without the US. What happens in the US is I'd say a big unknown. I'm just going to quickly have a look at their account to see what their profit margin is at the moment, because that will impact things. Let's just open that up. Yeah, I'm a little bit confused here because when I open the annual report for 2020, it says group revenue was 2.7 million. And in that update, it was saying it was 1.3. So that's a little bit confusing. But let's have a look. Well, in 2020, they only had 14 sites. And if they're on their 19th, that shows that things are going well there. If that's an increase of 5, which is about 30% increase on the UK at least. We should expect an increase in revenue from those extra rooms. Yeah, I'm just having a flip through that. In summary, I think it's still not 100% a go. I don't have full confidence in Escape Hunt being a massive company in 10 years' time, but I think there is a chance that it does well. It's not got that many escape rooms at the moment. I don't know what the full number is because they haven't let us know. But I would still assume that it's less than 50. And I think that the market has a lot of room to grow. It's still fairly uncertain what that size of market could be. But I think probably a couple of locations in each big city probably could probably sustain quite a few in big cities like London, New York, Los Angeles, etc. Of sizable populations, if you like. So, I mean, I guess it's proving, the numbers in the recent update are proving that Escape Hunt can do quite well, even after a pandemic, when people have been locked away in their homes. The Escape Hunt concept is still valid, and people still want to go to them physically. And it sounds like the B2B element, the corporate element, is still of interest. So it suggests to me that it is going to be a long-standing business over many years. I'd like to know a bit more from the company about where they see their digital revenue in the future. And I'd like to understand what the American opportunity holds. But we'll get a bit more in September. So I'm going to flick over now to Catebox. I'm just going to do this from memory because I know a decent amount about Catebox. So in their recent update, they said that they've now got 150 stores. I think there's a few highlights to Catebox. I think for me, Catebox is fantastic company, and I think that it's probably one of my strongest conviction stocks, just from my own portfolio. It's the one that's done consistently well over time. And there's a couple of key points which I think make Catebox an interesting prospect. I think that it's a fair weather. I think that it's a all-weather stock. It's not cyclical. So I think it can do well in boom times and bust times. People eat cake a bit like pizza. They eat it all year round. It's not dependent on the weather. It's not dependent on the economic cycle. It's not, they eat it, when they're happy, when they're sad. They have it as an accompaniment. You can have a slice of cake as an accompaniment to a meal. So there's nothing stopping you having a salad for lunch and then thinking, I'll have a sweet dessert, cake or whatever, or slice of cake. So I think that's good news. There's lots of businesses which are highly cyclical. If you think about the car industry, the property industry, etc. Even consumables like clothing has massive fluctuations with the economic cycle. I don't think Catebox has that. What else? It's growing its stores pretty successfully. And when somebody asks how many stores do they think they can have in the UK, the team suggested they could have as many as Greggs. Now, Greggs has over 2,000 stores. Catebox has about 150. So we can say that Catebox could easily go up 14x just on that number, just on the number of stores. They also said their cost of goods is going down, which improves their profit substantially as the number of stores grows. Their cost of goods sold goes down, which obviously improves their profitability. They keep their prices the same because they keep them fairly low to the franchisees, but their costs that are coming in, so the cost of things like the cake bases, the cream, etc., all of that is going down, whilst the profit margins to the franchisees, the cost of selling those goods to the franchisees stays the same, so the profit margin is going up. Plus, the value of actually selling a franchise is going up because the revenue per store is going up. which means they can actually charge more for individuals to become franchisees. What that means is, let's say in the first few years when they started to roll out franchises, they might have charged 50K. I think a few years ago they were charging maybe 75, 80. I'm sure in a few years' time they may be able to charge 100, 150. I know Domino's charges 250. I don't know if they'll ever get up to 250, but if they do, that's pretty much all, more or less all profit. It doesn't cost that much to kit out a Cake Box store, so that's good news as well. What are the other developments that are happening within Cake Box? Well, they're developing vegan products. They're working, apparently they're close to vegan cream. If they get vegan cream, they'll be able to, I think they'll be able to produce close to their whole cake and dessert portfolio in a vegan format, which I think is game changing, because if you think of the child to kind of 40-year-olds demographic, they're quite keen on plant-based eating, and it's actually growing. It's growing above the age of 40 as well across the whole section of society. So I think the vegan cake angle is huge, and you never know, maybe in a few years they may even be able to open up a vegan Cake Box store, like Pret have opened green stores that are just vegan. Okay, what else? The next most exciting thing about Cake Box is that they're creating stores within supermarkets. They couldn't tell us the name of the supermarket, but they have 5 concept stores in supermarkets. So I think there's other concepts that could come out of Cake Box. You could have supermarket stores. Greggs have drive-by stores in motorway service stations. So I'm still pretty bullish on Cake Box. Consistent from what I've been saying over the last few years, I think the thing that's most likely to happen is they double or triple again, and then the founders sell. They were asked about whether they would sell, and their response was, Cake Box is the only thing we know. So that, I guess, suggests that they're going to continue, even if they were offered double or triple the current share price. I would hope that they would go to 2,000 stores. I think if they do go to 2,000 stores, I don't doubt that Cake Box will be worth as much or more than Greggs. If we look just quickly at the Greggs valuation, it's valued at 3 billion, and at the moment Cake Box, I think it's about 100 million. But let's just have a look. 130 million. So, you know, I don't know what that is. I guess about 23x. I would be hopeful that they could grow it to that. I also think that Cake Box could go international. So I wouldn't be surprised if the guys stick at it for the next 10 years. It could go up 20, 30, 40x. But it's just whether they want to. They're not the youngest of owners. I don't know how old they are, but the CEO looks to be somewhere between 45 and 55. So I don't know how long he'll want to continue doing Cake Box. But I guess on the plus side, like, they have some interesting, exciting concepts. Like, it is changing. You've got the vegan range, you've got the supermarket range, you've got the increased potential of wealth. You know, if they sell now, I don't know how much they own of the company. I think it might be the owner owns 25 or something like that percent. You know, 25% of what it is at the moment. He might walk away with 30 million. You minus the I guess there's capital gains tax on some of that. So you don't walk away with quite as much as if they can sell it for a couple of billion. Then he could potentially become a billionaire from Cake Box. I don't see that as being outside of the realm of possibility. So we'll see what's his motivation. Is it to retire to being a millionaire, or is it to build a global brand? Remember, it's helping the planet as well with their eggless cakes at the moment. They could easily go vegan. That has quite a nice green angle to it. in as much as there's quite a lot of dairy used in cakes, and if they go vegan, you know, that could potentially help the world. Obviously, they're eggless cakes, so they appeal to Hindus and to flexitarians. The Hindu market is probably quite big in places like India and America, and there's probably a few other pockets, maybe in other parts of Asia. So they have global expansion possibilities as well. It's interesting that Escape Hunt is going global before rolling out in the US, in the UK, so much. You know, they have what was it, 19 UK stores, Escape Hunt, whereas Catebox has 150 plus, and they're not looking at international. So that's kind of interesting. I think you've got two perspectives there: going global first versus going global later. I don't think Greggs has anything internationally. I'm just going to check, so to speak. Right, so there were news. There's news that they might go international. I can't actually see anything more relevant than last year, but it says they're looking to go international. Who knows? Anyway, at its current state, Greggs, I believe, is just in the UK with over 2,000 stores and is valued at $3 billion. Catebox is just in the UK with 150 stores and valued at 130 million, with lots of growth opportunities. So I'm going to leave it there because I've come to about 30 minutes. I've spent about 15 minutes on each company. These are companies I think that are pretty strong in my opinion. It's just my opinion. Got to do your own due diligence. But yeah, there are other companies I like. I might do more on. I've also been doing some angel investing recently, using platforms like Crowdcube and Seedrs. I may do an episode on that in the future. Anyway, if you like what I'm saying, or you like some of the topics, and if you've got any shares that you want me to review or analyze, then feel free to write a comment on YouTube, like or subscribe to the Facebook channel, get in touch. Yeah, and I hope to see you guys in some other future videos. Thanks.